So right now is a perfect time because we're into the fall for all those media pundits to get out there and say, look, housing prices are going down. This is the end. Well, quite frankly, they go down every year because all the luxury homes pull off the market and wait because they can afford to, and they wait for the peak season to sell. So a lot of lower priced homes sell. Lately, with economic concerns, rising mortgage rates, things like that, inflation, all of those things, we've seen a lot of fear and speculation about housing prices. And that's persisted really throughout the second and third quarter of 2022. But lately, we've seen some really increased and enhanced attacks on real estate values. You'll always hear me talk about the two real estate markets, and there are two different markets. I want to make sure you understand that first and foremost. So you got to really watch your clickbait headlines out there when they say, real estate market's slowing or going down or crashing. You got to figure out which market they're talking about. There's the amount of sales volume, which has definitely slowed down nationwide. There are less sales out there. There's less sales volume. We're projecting to be off about 20% this year as a country. That's the big one. Home prices, albeit have slowed, values have continued to go up year over year. However, there are exceptions to that all over the place for lots of different reasons. But for the most part, housing appreciation has been well above average for 2022. And that comes as a surprise to a lot of people that are reading headlines. And that's scary to a lot of people. But lately, there's been a very sustained attack on housing prices, home values, not just real estate sales volume. And that comes in the form a form we haven't seen since the 1980s, which is over 40 years ago. And back then, the attack was a gentleman named Alan Greenspan, and he was the Federal Reserve Chairman when Ronald Reagan was the president. Now we have got Chairman Powell with President Biden in office, and you're starting to see the same dynamic where the president wants there to be a strong economy where everybody's making money so he gets reelected. Inflation be damned, that's the sign of a strong economy, which is exactly what Reagan used to say in the 80s. Now Biden's saying the same thing, although not as loudly yet. But Chairman Powell just came out and said something different, very different, which was, in a nutshell, I'm going to take down housing prices too, because we need to make housing prices more affordable for people. Whether you agree with that or not, I don't really care. The point of the matter is we're trying to read what the Federal Reserve Chairman is going to do. Now, I can tell you Greenspan said the same thing in the 80s, and he was unable to take housing prices down. And I don't know that Powell can either, but he's certainly going to try, and that could do some damage to values. You can say that we're going to keep increasing prices and mortgage rates, take them up, which I think he will. I do think rates are going to go. I think rates are very low right now, and they're going to go much higher. It only makes sense with the inflation. And, I've been in real estate 30, 40 years, so they are low. This is, I remember when you could get a 6% rate and we were celebrating because I came through I'm dating myself, I guess, but I do remember the 12% and the 9% very vividly while being in the real estate industry. So I do expect them to go back up to, the 40-year average is 8.5%. I expect them to at least get there and continue to go past that a bit. I know that'll scare people, but trust me, the band marches on, prices keep going up, sales keep doing their normal amounts. We just got to get used to our conversations with clients, but they hear it and they don't blame you, which is fine. People keep buying dwellings. However, they can slow things down every time we increase rates because people panic to wait to buy or sell until they go back down. It's once they get used to it, sales pick up again. But if they keep increasing, you can really stunt the growth. The reason that rising rates don't bring prices down is quite simple. They bring housing supply down. If you're in a 4% interest rate in your house right now, you don't want to buy a home at 8%, let's say. That also means I'm not going to put my house that I have a 4% mortgage on the market either. So basically, you curb supply and demand, which if we curb those at a relatively equal rate, the housing price, the rate of appreciation doesn't change at all. And that's what we saw in the 80s. So there's a really good chance that Chairman Powell cannot succeed in stopping home prices because the amazingly low amount of housing supply. And I want to show you something that the Realtor.com chief economist said just this week, which is pretty interesting. And it's very, very true. And what Danielle Hale, the chief economist for Realtor.com, said was that today's shoppers generally have more homes to consider than last year's shoppers in 2021. But the market is still not back to pre-pandemic inventory levels. In fact, the active listings count still trails its 2020 and 2019 by 7% and 43% respectively. So we have less listings than we did in 2020 and 2019 as of 3 quarters in the books of the year 2022, to give you an idea there. So housing supply is still very low. And if you think back to 2019 and 2020, we saw price appreciation because of that imbalance in supply and demand going up, I think 9% and 10% those 2 years. 2021 was almost 20%. This year, as of the midway point of the year in July, Freddie, Fannie, NAR all predicted 10 to 15% appreciation this year. So understand, we are looking at home prices going up. They're just not going up as fast. And you will see certain micro markets where they don't. But the reason you're seeing a lot of clickbait right now about how housing prices are dropping, they're doing it month over month. And let me show you how that gets confusing. And they just like to show bad news to get people to watch. And they know most people won't read the article or understand month to month. But this is from 2020 to 2021, the housing boom of last year, then 2022. This is monthly home prices and how they went up. Look at how there's a seasonality ebb and flow. It goes up, 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 then down a little bit in the winter, then up, 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 and then down a little bit in the winter, and then up, up, up. And now we're starting to go down, in the fall and winter. And now we're going down in the fall and winter. So there is a ripple effect, even in a housing boom where things are skyrocketing. There's still prices decline month over month as we go into fall and winter. So right now is a perfect time because we're into the fall for all those media pundits to get out there and say, look, housing prices are going down. This is the end. Well, quite frankly, they go down every year because all the luxury homes pull off the market and wait because they can afford to, and they wait for the peak season to sell. So a lot of lower priced homes sell, which is why even in the worst markets, home prices and values down around the median home price are always hot. They're always hot. The only time they haven't been hot is when new home sales started pricing out below median home prices. When new home construction, oversupplied the market. This happened in both the Great Depression and the Great Recession, usually a once every 100-year deal, where new home construction on average was priced below resale on average. And home builders had to keep discounting to compete with each other and the resale homes, which brought resale values down. Now, the United States is nowhere near that. New home construction is considered luxury almost everywhere. It costs a lot more to buy a new home than go buy a median priced resale house in any community. So there is no new supply because the cost to build is so much higher than it used to be. It's almost impossible for a builder to put out a product that competes and gets down below the resale median home price. So because of that, there's no new supply hitting the market for the median home price. So if you're investing in homes, which you always should be anyway, the median home price or below for your investment property, you're really stable. In fact, if you list something around the median home price or below in any community, it's going to be gone very, very quickly. And in most communities, it's going to be gone with multiple offers, regardless of the slowing or decreases in home prices. So understand your micro markets. Now, it's true there's certain luxury areas that are going to have that prices got out of control and they're going to correct. And that even happens last year. I mean, that happens all the time where somebody buys a house because they really want it and they go up and increase the price. Then maybe one or two follow. So you got new comps, but they actually are way, way over exaggerated. And that price dollar per square foot comes back down as the market corrects. That does happen, especially in luxury, especially in an economic downturn, because a lot of those people have a lot of money invested in hedge funds and stocks and mutual funds. And when they see the Dow Jones Industrial Average come back and the S&P 500 come back like they have, they tend to really panic, and they're not looking to make very risky investments into high-end luxury first homes, second homes, anything like that. So luxury is very fickle that way, but the median home price is extremely different micro market. Then you got to look at different pockets of the country. If you still go into the Midwest to buy homes around the median home price, oh man, there's still institutional investors there, purchasing like mad, trusts, flippers, holders, all kinds of hedge funds still buying across the country in places where the national median home price is still the median home price. Let's put it that way. In those types of areas, you're seeing a very hot micro market still, and it's still very competitive to get homes at or below the median home price, especially the further below the median you go. That's always the safer investment. That's why people always tell you to invest in rental homes that are much cheaper. The cheaper you can go and stomach it as an owner, the safer the investment and the bigger the cash flow, because your rents typically are a higher percentage of your cost to carry those homes. And they always sell easy. It doesn't matter on the market. So if you need to cash out, they're highly liquid, if that makes sense. So that's the idea behind that. So I hope that puts some perspective in place on home prices right now, and that home prices are, kind of like the NAR economist said. I mean, we're really getting back to the same rate of appreciation pre-pandemic, which were great years. 2017, 2018, 2019, where we saw healthy above average appreciation and inventory, very hot sellers market, oftentimes inventory below 3.5 months, which the whole country is now still too. Those are hot sellers markets. That's still going to get you multiple offers around median home prices. I just think the whole country got a little punch drunk on, crazy town of 2021 and the second half of 2020. That will do that. And when things slow down, it feels like a much bigger slowdown. It's like if you're going to jump into a 80-degree pool, if you get in a 105-degree jacuzzi beforehand, then you jump into the 80-degree pool, it's going to feel like a 60-degree pool. That's kind of the dip. I'm a swimmer. I experience that quite regularly. That's kind of the dip I think the country's going to, and we have to adjust. And quite frankly, the adjustment is very simple. It doesn't take anything crazy. Don't believe all the hype out there about that. We just got to get back to those activities where we generate business again. It's not going to, there isn't enough sales out there just to jump into everybody's lap. Everybody's got people, whether it's in your farm or, your prospecting database or your sphere of influence database. One of those databases, either you're generating business from someone you don't know or the people you know. Usually they're in other agents' databases too. But there was enough sales to go around that they would actually reach out and contact you. Now, with sales volume, the other real estate market coming back about 20-25%, now it's going to be the people that reach out and do an activity to generate business. And the ones that waited on it and don't know how to lead generate, they're going to starve or get out of the business. That's what's going to happen. So it's real simple. The formula for success is lead generate. We're going to have to do some business generation activities. So, and that's going to determine your success in real estate. The people that do that are going to be just fine and not lose a step, if that makes sense. So it's time to roll up the sleeves and get to work.